for Rainbow itself, we will virtually be doubling the size at a very, very low cost for the very high grade project, which can be brought into production very, very quickly compared to a typical project.
Hello, you're watching Proactive. Joining me is Rainbow Rare Earths CEO George Bennett. George, very good to speak with you. Uberaba seems to be moving very quickly. Can you explain how Rainbow was able to get from MOU to economic assessments in such record time?
Morning, Stephen, and thank you for having me on your show once again. Yes, we have got to the economic assessment stage very quickly, and it's largely on two reasons. A, we didn't have to drill the resource to come up with a production profile, and B, we've been able to develop the flow sheet very quickly using a lot of what we've developed for Phalaborwa. As you know, the Phalaborwa project is also based on taking rare earths out of phosphogypsum. That's the result of phosphoric acid production. And at Uberaba, we have almost an identical process. We have a phosphate hard rock that's mined by Mosaic. It's concentrated and fed as a slurry into their phosphoric acid production plants at Uberaba. They add sulfuric acid and heat, similar to what Sasol did in South Africa at Phalaborwa. And this creates a waste residue, a phosphogypsum waste residue, and the rare earths that were present originally in the hard rock have now been concentrated and followed through into the phosphogypsum waste residue at a very economic grade. The grade, I might point out, the average grade at Uberaba is sort of some 20 or 30% higher than what we see at Phalaborwa. So that also, even though the Phalaborwa grade is a great grade for the type of project we are doing in South Africa, the fact that Uberaba is even higher grade bodes well for this being even a better project in our view than what we see. We're very excited about the project, and we're excited that we've been able to progress very quickly. As you know, if this was a typical rare earth development project based on mining, and it was discovered effectively, you're talking about 10 or 15 years of development before you can even think about construction and going to production. With Uberaba, we've got to this stage in literally 18 odd months, circa maximum maybe 2 years, if that. And we're going to be completing this stage of feasibility study in record time as well.
George, you developed a methodology that avoids the need for drilling entirely. Can you walk us through how you're defining the feed resource and how it'll be validated?
Well, we've engaged with the CPR, and he's happy with the methodology, and it will be signed off in the study. But basically, what we realize is that we have a hard rock phosphate resource, which is mined by Mosaic. It's a very, very long life. They mine 3 phosphate deposits. These are very, very long life deposits ranging from 25 odd years to plus 40 years. So we have a very, very long life source of phosphate rock being mined. These phosphate mines have a JORC compliant resource on them because they've been drilled for the resource definition for Mosaic, for their mine planning, obviously. And in that drill core is we will be just need to go through the assays and take the rare earth grades, and we can extrapolate those rare earth grades all the way into what has been fed into the process plant. We've also been taking samples of the feed coming into the phosphoric acid production plant, and we've been able to monitor the feed going out onto the tails over quite a significant period of time, so we can track the rare earths coming into the plant and going out onto the stack, and we have all that information. And based on that, the CPR person will be able to come up with a resource for the feed grade, which, as I said, we know what the grade is, the average grade of this material is, and we know that it's a very, very long life. We're basing the study on a 15-year life, but we know that the phosphoric acid plant and the mine life is way in excess of that. As I say, this makes it a very, very long life project, which excites us and shouldn't excite investors, because investors look for 2 key things in resource type projects, which is grade and life of mine. And we tick both those boxes with having something that will have a very, very long life of mine, as well as very high grade for the nature that we process in here. Even though this is a chemical process, we have to footprint this against a typical rare earth sort of mining project as it were.
George, with Uberaba being around double the size of Palabora, what does that mean for Rainbow's long-term growth and rare earths production potential?
Well, the MOU we signed jointly with Mosaic is that we're doing everything on a 50-50 basis. And we've all the costs we've been sharing on a 50-50 basis to date, because that's the terms of the agreement. And based on the economic assessment, if it delivers the project that we believe it will deliver, then we'll go into a definitive agreement with Mosaic, once again on a 50-50 basis is our intention. And that means we will have effectively another Palabora will be our economic interest, because we're going to build 2 modules, effectively 2.15 million tons per annum each module to treat 2.25 million tons per annum to treat circa 4.5 million tons of phosphogypsum per annum, which is double the size of Palabora, and we'll have effectively 50% of that production and 50% of the economics of that project. So that means for Rainbow itself, we will virtually be doubling the size at a very, very low cost for the very high grade project, which can be brought into production very, very quickly compared to a typical project.
George, the EA cost is just $230,000, so much lower than a typical feasibility study. How's your low-cost approach helped you stay capital efficient while you progress the project?
Well, as you quite rightly mentioned, it's a very, very low cost. I mean, the typical PEA on a mining project, you'd be spending millions of dollars of drilling and work and test work and whatever to get to a stage where you could then go into a PEA. We've been able to do this, as I mentioned, with the way we're defining the feed grade, with the fact that we're basing a lot of this work on what we've already developed with for Palabora, and we're working very closely with the Uberaba team on test work, on the assay results that we've got, and also the development of the flow sheet, which has been driven by Rainbow. So because because we'll be basing a lot of this flow sheet on what we see at Rainbow, circus, probably about 80% of our flow sheet for Uberaba will be based on the work we've done at Palabora in South Africa, is resulting in us getting to this stage of study at an exceptionally low cost and well within the budget that we raised and the money we raised last year with the deal we did with the Ecora. So I'm very pleased that we've been able to do this at a very low cost.
I mean, assuming the EA delivers what you expect, what would be the next major milestones for Uberaba?
The next major milestones will be a definitive agreement with Mosaic going into the pre-feasibility study.
George, I hope you'll keep us updated on any progress. Thank you very much for speaking with us today.
No, thanks very much for your time, and have a good day. Thank you.
You too. George Bennett, the CEO of Rainbow Rare Earths.